Did you know that over 80% of beginner traders blow up their accounts within just a few months? It's not because they didn't know what to trade. It's because they didn't know how to protect their money. They focus on profits, not protection. They chase wins, not consistency. They think trading is about big gains, not smart losses. But here's the truth. Risk management is what separates real traders from gamblers. Think of it this way. Anyone can win a few trades by luck. But staying in the game long enough to build real results, that takes discipline, control, and a plan. Today, I will explain to you how this works, step by step. By the end of this video, you'll know how to size your trades, use stop losses, avoid overexposure, and control your emotions before they destroy your capital. I'll even show you how to calculate your trade size like a pro. And if you stick around to the end, I'll give you a preview of what we'll cover in the next video, how to set exact stop losses and take profits on your chart. Let's dive into the foundation that turns reckless guessers into consistent traders. Risk management means deciding exactly how much you're willing to lose before you place the trade, not after it's already gone against you. Most beginners focus on how much they can make. Professionals, they obsess over what they could lose and how to prevent it. It's not glamorous, it's not emotional, and that's the point, because emotions and risk management don't mix. If you're trading based on fear or greed, you've already lost. Risk management gives you control. It gives you power, and most importantly, it keeps you in the game. Here are 4 golden rules. Risk only 1 to 2% of your balance per trade. Always set a stop loss. Use position sizing, never guess. Never let one trade destroy your week. Stick with these, and you'll already be ahead of 90% of traders. Let's be honest, most traders don't fail because of strategy. They fail because they ignore risk. They go all in, they move stops, they add to losing positions, they trade emotionally. They gamble, but trading is not a game. It's a business. One bad trade without a stop loss, that's how people blow up accounts. You don't need to win every trade. You just need to lose small and survive long enough for your edge to play out. What's the worst risk mistake you've made? Be honest. Drop it in the comments. I'll respond to a few personally. Now let's get practical. If your trading account is $1,000, you should risk no more than $10 to $20 per trade. If you have $5,000, that's just $50 to $100 max. This is the 1 to 2% rule. It might sound boring, but it's what keeps your capital alive. It lets you survive 10 bad trades in a row and still have room to recover. Traders who win long-term, they're the ones who risk less. If this makes sense so far, give the video a like. It helps this content reach more traders like you. Let's talk about your best friend in trading. The stop loss. A stop loss is the price where you say, I was wrong and I'm out. Here's how to place it like a pro. Find a key support or resistance level. Place the stop just below or above it. Make sure your total dollar loss still fits within the 1 to 2% rule. Without a stop loss, you're not trading, you're gambling. And you're letting your emotions call the shots. In the next video, I'll break down exactly how to set stops and targets visually on your chart. Don't miss that. Now that you have a stop loss, how do you calculate the perfect position size? Use this simple formula. Position size equals risk amount divided by stop loss in dollars. Here's an example. You want to risk $20. Your stop loss is 50 cents away. 20 divided by 0.5 equals 40 shares. This formula gives you full control, so you can trade any setup with any stop distance and keep your risk consistent. This is how professionals trade. This is how you stay in the game. Let's talk about profit potential. If you're risking $20, aim to make at least 40 or 60. That's a 2 to 1 or 3 to 1 risk-reward ratio. Why? Because even if you win only half of your trades, you still come out ahead. That's the beauty of good math. And good math wins over time. Now let's talk mindset. Risk management only works when you stick to it. That means following your plan, not moving your stop, not doubling down on losers. Discipline beats emotion every time. You don't rise to the level of your goals, you fall to the level of your systems. And risk management is your system. So let me ask you, what's your biggest challenge with risk management? Is it emotions, sizing your trades, holding discipline? Drop your answer in the comments. I read every single one. Let's recap. Risk only 1 to 2% per trade. Always use a stop loss. Use the position size formula. Aim for at least 2 to 1 reward. Stick to your rules, no matter what. If this video helped you, give it a thumbs up. Subscribe to Trading Visual for more powerful lessons like this. And in the next video, I'll show you how to set stop losses and take profits on real charts. See you there.